So today from Bloomberg, JPMorgan says Bitcoin crash survival shows it has staying power. So it might be time to sell your bags, guys, because JPMorgan has turned bullish again. We know what happens every time these big institutions turn bullish. Today, I also have for you Ripple executive launches XRP e-commerce payment platform available to 455 million websites. And, reading this made me think of what Ripple just put out a little bit before with their remittances and SME payments update that they put out. And David Schwartz replied to it. And I kind of wanted to read the replies and link it back to this article because it's just really weird how the news came out and how these things basically kind of add up. To me, it's some pretty good news. And I'm also going to show you guys Grayscale reveals why institutional investors are pouring millions into Bitcoins. So let's start here. Let's start with Grayscale. And later today, I will probably also have a Cardano video out for you guys. I wanted to put some Cardano news inside of this video, but it was going to end up being too long. So I'm just going to make a separate video and cover strictly Cardano. But anyways, Grayscale reveals why institutional investors are pouring millions into Bitcoin. So, the world's largest digital currency asset manager, Grayscale, says institutions are now looking to crypto as a potential hedge against global economic instability. Exactly how we've been thinking, guys. So, Grayscale's director of investor relations and business dev reveals that average weekly investments in the firm's crypto trust have increased more than 800% this year. And these are their average weekly investments, not double, but up 800%, which is pretty insane, guys. Sharif Askari says COVID-19 has played a significant role in boosting the Bitcoin narrative. And we're hearing this from a lot of different people saying that COVID-19 is ushering in, all these crypto assets and things like that. So we're hearing it from multiple people. He says COVID-19 and policy implications have set the stage for Bitcoin to be seen as a store of value asset. Institutional investors are taking active long positions in digital assets through our products. So that's insane. So through Grayscale, taking longs on digital assets, insane. It's because they're looking for an asset that is scarce that can be used as an inflation hedge in a world where we are presented with unprecedented monetary stimulus. The Fed is printing money like crazy, guys. Like, we added like 6 trillion to our debt clock. It's insane. The first quarter of this year, Grayscale raised $500 million across all of its products. Investors poured $390 million into the Grayscale Bitcoin Trust and $110 million into the Grayscale Ethereum Trust. So not only are they buying Bitcoin, but they're also buying Ethereum. The firm says 90% of fund inflows are now through institutional investors. Now, traditional hedge funds represent the majority of Grayscale's institutional investors. Sharif Askari says 44% of the fund inflows came from multi-strategy funds, and a significant portion also came from long/short equity funds. As you guys know, Grayscale is also buying more Bitcoin than is being mined per week. So this is just some more bullish news coming out of Grayscale. They're just reinforcing everything that we've in the crypto space have basically come to predict, come to believe. When I first saw COVID-19 coming up, I definitely thought like, hey, with everything locking up, this is going more digital. And now to see other people share that same mindset, share those same thoughts, and actually putting their money where their mouth is, because it's not Grayscale just talking about Bitcoin and talking about cryptocurrencies and how they're a good hedge, but it's them actually buying and putting their money where their mouth is. So that's really interesting to see. And I think we're just going to see more and more institutions come in. And I think the price of Bitcoin and cryptocurrencies are going to go up, but especially Bitcoin because of a simple supply and demand, right? I think other altcoins will follow, but altcoins are you have to be a little careful. You have to make sure you're holding the right ones. Any shit coin can pump, but really make sure if you're going to hold altcoins as an investment, make sure you're holding ones that you really think will make it, because most of them won't. Most altcoins won't be around in the next 5 to 6 years. There'll be all new ones, and then those will be gone too. So make sure you're holding projects that you actually believe in. With that said, Bitcoin today is at 9,400, Ethereum's at 237, XRP is doing nothing but tanking at 19 cents. So what else is new? Litecoin's at 44, Cardano's at 7 cents. We have a 270 Tezos and a 408 Chainlink. Let's go and check on VeChain. VeChain's at 0095 and basic attention tokens at 22 cents. Our fear and greed index is the same, so people are still in fear. Investors are still a bit shaken out, which is understandable. You know, no one really knows what's going to happen. We're getting just sideways trading action, a lot of chop, and you know, it's understandable that investors are scared. But of course, hey, if we go up to 11,000, then we're going to see people pouring in like crazy, and the greed, I'm sure, will start pouring through. With that said, guys, I wanted to come back to this chart. So we have gained a lot of subscribers since I first started making my videos, and for the first week of making my videos, I used this chart a lot, and I just kind of wanted to come back to it, because I see people in my comments and they're saying some things, and I think it's good. I used to say I like to look at this chart to humble myself, you know, whether Bitcoin comes down to 5,000-6,000, like I've been saying, that's where I'm personally looking to accumulate, or whether you're buying here at 9,000, like no matter what, if you're buying between 5 to 6 or 9,000, just look at where we are in the chart. It really doesn't matter. So if you're looking to invest into Bitcoin into the long term, you're looking to sell at the peak of the next bull market or hold even longer than that, then this is still a great buying opportunity, you know. And if I was dollar cost averaging at the moment, I would definitely be buying at 9,000. I've bought $9,000 Bitcoin before. I definitely have a lot of buys around this area, but I've been in this market long enough that I want to buy at the best areas of value for me. But if you're just coming in here new and you just want to get your foot started, this is a great area of value, especially if you believe that Bitcoin's going to be 100,000, 150,000 in the next upcoming bull run. So I just kind of wanted to get that out there. You know, look at the long term, zoom out, and don't be so worried about this little, you know, Bitcoin going up or down $500 in the short term, especially if you're here for the long term. With that said, guys, if you guys could like the video, if you're enjoying it so far, that would be awesome. I'm really excited to hop into this Ripple news and JPMorgan news. And if you guys like daily crypto news, then go ahead and subscribe to the channel. Guys, thank you so much for 869 subscribers. I think we grew like 100 subs yesterday. So I'm going to do my best at just, you know, trying to keep bringing you guys a good flow of content and give you guys basically the best content I possibly can. With that said, Ripple executive launches XRP e-commerce payment platform available to 455 million websites. So the director of product at Ripple, Craig DeWitt, has finally launched his XRP Payments project called Payburner. The payment project is designed by DeWitt to make it very easy to send and receive e-commerce payments, and it's made available to relatively 455 million WordPress websites. Herald Sheets reported that Craig DeWitt is considering the release of an XRP-powered payment platform, which is now finally launched. He made this new development known in an interview with Thinking Crypto. In this interview, DeWitt said his success in the building of an XRP-based music platform, xsongs, prompted him to realize the necessity of creating a universal one-click cryptocurrency payment system. He says, we realized that there wasn't actually a great ecosystem for individuals to do peer-to-peer payments using XRP. In the initial version of xsongs, the vast majority of payments were coming from digital asset exchanges. People were buying songs for 20 XRP, which was the weirdest thing. Turns out that that's the minimum withdrawal for a lot of these exchanges. Then it kind of dawned on us that actually there hasn't been an excellent wallet infrastructure that makes things really easy for customers of xsongs to actually leverage XRP. In December of 2019, Craig, the Ripple's director of product, released xsongs, a new digital marketplace that enables artists to sell their contents online for digital token XRP. Artists receive 100% of the revenue from the sales of their songs via peer-to-peer XRP payments. According to Craig, newly launched ecom platform Payburner will be available as a Chrome extension and WordPress plugin, which will make it available to relatively 455 million websites. He says, when you look at the distribution of websites today, you have a vast majority of websites that run on WordPress. One thing that we're really excited about is by building a plugin to WordPress, you can make it very easy for people who want to receive XRP in payment for goods to have that plugin. Then you have a built-in ecosystem of people who are easily able to purchase the goods using the Payburner plugin that they have in their browser. So the way that we're approaching this is really one of a two-sided market, one where you have sellers and one that you have buyers. We're going to go actively cultivate the ecosystem on both sides to make a better experience for both parties, Craig DeWitt stated. Now, guys, after reading that, right, so XRP is launching, or Ripple executive is launching an XRP ecom payment platform. And all of a couple days ago, all we've been hearing is about this FUD about Ripple possibly pivoting away from XRP. But I just want to show you how this actually really ties in, because a lot of people were scared about this, a lot of people were angry about this, and I just want to read this and then show you guys how the flow is kind of working here. So this came out, as you guys know, everybody's all scared about this, and at Fat Media asks and tags Joel Katz, which is David Schwartz, and he says, seems this has caused a bit of anxiety. Are you able to offer any further clarity? Thanks. And to our surprise, David Schwartz actually responds. So I'm going to read you his tweets. He says, it was always our preference to handle smaller payments directly rather than handling larger payments that are later divided into smaller ones. Some partners weren't willing to let us handle their retail payments directly until we could prove that the technology worked reliably. Treasury operations were safer because customers weren't waiting for them to complete. There's an obvious advantage to handling larger payments. If you think the size of the payment measures economic importance or relevance, then big payments mean big money numbers. But handling lots of smaller payments has advantages too. They're just subtler. A big one is that it's stickier. The benefits are pushed all the way down to the customer, and then it becomes more than just a replaceable tiny cog in a big machine. He says you also need to prove lower fixed costs to handle smaller payments, and the benefits flow more directly to those who most need them. And guys, I think the most notable thing he says is this right here. I'd encourage people to give some thought to the relative advantages and disadvantages of more dollar value versus more individual payments. Particularly in the remittance context, it's not clear cut. So he's saying all this, and remember, the first thing he says, what's the first thing he says? It was always our preference to handle smaller payments directly rather than handling larger payments that are later divided into smaller ones. And what does this product do? Well, Ripple is teaming up with 455 million websites making instant XRP payments possible, and they're going to be focusing on what with this? Smaller payments directly. Smaller payments. Ecom stores do small payments, right? You're buying $20 hats, $30 shirts, $100 watches, and it's going to be a WordPress plugin. A lot of people use WordPress. You know what happens when they make, Shopify plugins? What happens when, more sites? So 455 million, that's just to WordPress people. So anyways, guys, that came out. I know people were selling their bags, people were converting to Link, but just look how things are lining up now. I'm pretty glad I didn't end up selling my XRP out of fear or anything like that. But I just wanted to kind of connect those dots for you guys. Let me know what you think down in the comments below. With that said, let's move on to JPMorgan. So this article is a little drawn out, so I'm just going to read the most important things that I found, the most interesting things. So according to a report from the bank titled Cryptocurrency Takes Its First Stress Test, Digital Gold, Pyrite, or something in between, that cryptocurrencies largely survived the madness of March suggests longevity as an asset class, wrote strategist at the bank led by Joshua Younger and Nicholas. I'm not even going to attempt that. I'm sorry, Nicholas. But they say price action points to their continued use more as a vehicle for speculation than medium of exchange or store of value. And guys, keep in mind these writers are writers for JPMorgan. So instead, Bitcoin appears to have been correlated to riskier assets like equities, the JPMorgan strategist said. Exhibit 1, though the bubble collapsed as dramatically as it inflated, Bitcoin has rarely traded below the cost of production, including the very disorderly conditions that prevailed in March. Here are the positives. In the depths of the March panic, the coin's valuations didn't diverge much from intrinsic levels, meaning that its value only briefly dipped below mining costs even as volatility spiked. In addition, there were a few signs of a flight to liquidity within the asset class. In other words, during shock periods like the one experienced in March, traders might rush for safety or toward more liquid parts of the crypto market, but most cryptocurrencies fell at the same time, and that correlation has risen over the past few months. That suggests that there's little evidence of run dynamics or even material quality tiering among cryptos, even during the throes of the crisis in March, they wrote. Finally, the coin's market structure turned out to be more resilient than those of currencies, equities, treasuries, and gold. Guys, again, the coin's market structure turned out to be more resilient than those of currencies, equities, treasuries, and gold. When I read this, my jaw kind of dropped. And gold? Yeah, all right, currencies, treasuries, yeah, sure, that's worthless, but gold? Come on. And this is JPMorgan strategist saying this? how much more bullish can you get? I mean, I don't even really try to be a bullish or a moon boy or anything, and I'm very patient with this. I don't need it to go up to go up tomorrow. I don't need a moon to come. I'm doing fine. But I mean, geez, like when you read that, it's insane. So lastly, though Bitcoin saw among the most severe drops in liquidity around the peak of the crisis, that disruption unwound itself much faster than other asset classes. Guys, it's just insane that Bloomberg, coming from Bloomberg, JPMorgan strategists are seeing Bitcoin as a store of value. Isn't that interesting? They're showing, they're seeing, they are witnessing, they are analyzing that this asset class, that Bitcoin, actually hangs on to its value. It might actually have a store of value. That is insane. I did joke in the beginning that this might be a sell signal, guys. Honestly, every time I see something bullish come from a bank, things do seem to drop. But it's not like they're shilling you to go out and buy, but it's merely an observation that they're putting out that Bitcoin is a store of value. So I guess we'll see what happens. It would be funny if the price dumped after this come out. That would be pretty hilarious. But that'd also be a great buying opportunity. Guys, look long term. Look at what's happening. Look at what this JP Morgan. They're realizing Bitcoin has value. Remember this one we read with Grayscale and their investors, and they're pouring millions into Bitcoin and other cryptocurrencies. Look at where this space is going. And look at where we are in the charts. We are still so low. We are still so early. If you guys like the video, please consider subscribing. I am most likely going to get you guys another Cardano video out today. I want to get some Cardano news out, so look forward to that. And yeah, if you could like the video, that would help push it in the YouTube algorithm, and I would appreciate it greatly. I appreciate any support that you guys choose to give to the channel, so thank you all who do choose to support it. With that said, I will see you all on the next video.